Everyone wants to buy a health insurance plan that offers maximum coverage to our loved ones at the time of emergency. However, with the availability of different health insurance plans, it can get confusing to pick the right one. Going through so many policy types, their features, inclusions, and limitations can seem to be a frustrating task. And to avoid the hassle or time constraints, a lot of people end up buying a health plan without knowing if it would be adequate for them or not. Let's see some useful tips to help you choose the best health insurance plan for your family. Decide the type of cover, individual or family floater. Once you get convinced that a health insurance plan is a must-have even before starting to invest for life goals, the confusion is between buying an individual health plan or a family floater. One should consider an individual plan over a family floater cover if one wants an extensive coverage. It ensures that adverse experience in one particular policy does not affect others in the family. Balance sum insured for other members may not be adequate at a time in case of a family floater policy. Individual health plans are bought in the name of each individual spouse, children, parents, etc. This means, the premium will be as per each individual's age and respective sum insured. Some insurers, however, provide a discount on the total premium if more than one member of the family is insured simultaneously. In case of a claim by any one member, the sum insured of other members remains intact and doesn't get affected. Family floater health plan covers more than one member under the same plan. For example, both parents and their children can be covered together and only one single premium is to be paid. Under a family floater health plan, the entire sum insured can be availed by any or all members and is not restricted to one individual, as is the case in an individual health plan. A family floater plan takes advantage of the fact that the possibility of all members of a family falling ill at the same time or within the same year is low. Determine the cover required. Whenever you buy health insurance, remember to buy it looking at the future. If a heart surgery cost 10 lakhs today, it may cost 20 lakhs 10 years later. The lowest cover you must have is 5 to 10 lakhs, going all the way to 20 to 25 lakhs. Look for policies that increase your insurance cover every claim-free year. Also, consider a top-up cover to enhance your existing insurance. Such covers are cheaper than basic plans since they kick in only after a threshold has been crossed. Check no claim bonus option. Under this option, the insurers offer additional coverage for not making any claims during a policy year. Most insurers provide an additional 5% increase in sum assured amount for no claim bonus, NCB. The bonus can also be availed while renewing your health insurance policy, as most insurance providers offer NCB to the insured during the policy tenure. As the number of claim-free years increases, the percentage of NCB also increases. While buying a health cover, make sure you choose a policy that has the feature of NCB. Check for top-up option. Top-up health insurance option can help you to reduce your insurance premium. It works on the simple principle of policy deductible, which is the predefined amount that you will bear, through your own finances or any other insurance, during a medical event. Any amount over and above policy deductible will be borne by the insurer. Simply put, if you opt for a 5 lakh sum insured with deductible of 2 lakhs, then 2 lakhs will be borne by you and 5 lakhs over and above the deductible of 2 lakhs will be borne by an insurer during the policy period. Check sublimits in the plan. Most coverage benefits under a health plan have sublimits that limit the extent of coverage allowed under the benefit. Example: room rent limit is one such common sublimit found in many health insurance plans. The limit is usually either expressed as an absolute amount or as a percentage of the total sum insured. For instance, if the allowed room rent limit in your health plan is 10,000 rupees, your plan would cover your room rent expenses up to 10,000 rupees. However, if the limit is expressed as 1% of the sum insured and the chosen sum insured is 5 lakhs, your room rent limit is 5,000 rupees. While choosing a health insurance cover, it is important to select a plan that comes without any sublimits. Otherwise, you will have to pay from your pocket. Check waiting period. All health insurance plans cover pre-existing ailments but after a period of 48 months. Few cover them even after 36 months or lesser. However, at the time of buying, it is very important to disclose the pre-existing ailment, for a smooth claims settlement process. Further, coverage of certain defined and specific ailments have a waiting period of 12 to 24 months, post which they are covered for the claim. So make sure that you check the time duration after which the pre-existing diseases will be covered in your family health plan and choose a plan that comes with a minimal waiting period. Check co-payment option. It is the percentage of the amount that you will have to pay from your pocket. The insurance company pays the remaining hospitalization expense. For instance, if you have a policy with a 20% co-pay clause, this implies that for a claim of 1 lakh, you will need to pay 20,000 rupees from your own pocket while the insurance company will pay 80,000 rupees as part of the claim. In a senior citizen health insurance plan it could be a mandatory feature. In higher age groups as the premium rates are higher, a copayment may provide some relief in terms of affordability, as it helps to keep the premium low. Free health checkup option. Free health checkup features vary from company to company and the type of policy you hold. Most companies offer this feature with a waiting period. Some having a waiting period of 2 to 3 years while others offer it from day one. Policyholders should follow up with their insurance companies once a year or during renewal and avail this benefit. Check lifetime renewability option. When you buy a health plan, make sure to check for how many years the plan will cover you or whether it offers limited renewability or not. Because you may require a health plan the most during the later years of age. So, choose health plans which offer lifetime renewability. This will enable you to continue with the same plan in the years to come without the hassle of buying another policy after crossing the age limit. For example, your health insurance plan offers renewability till 40 years. Once you pass the age, then you would need to buy another one that will cost you much more. And if you buy a plan with lifetime renewability, you can continue it further in a hassle-free manner. Check claim settlement ratio. The claim settlement ratio is the number of claims settled by the insurance provider over the total received claims. Always check the claim settlement ratio before finalizing the health insurance plan. Check network hospital coverage. Check whether your preferred hospitals and doctors are included in their hospital network. Always prefer an insurance provider that has a wide network of hospitals across the world.
So friends, thank you very much for watching the video. If you like this video then please like, share, comment and subscribe for more investment related videos.